Scott Martin, Kingsview Asset Management Chief Investment Officer. He's also a Fox News contributor. We've got Jason Rotman, Lido Isle Advisors Managing Partner. Jason, give me your reaction.
I'd like my notes to be published officially on the screen that I sent before earnings were released, saying don't buy Amazon at these levels. Really short and sweet. Amazon is a phenomenal company. It's overvalued. I wouldn't touch it because its PE is almost at 200. Prime gets you stuff in a day. You're not going to see Prime profits. You're going to need to wait a long time if you buy at these levels.
But, Scott, the business is all about the cloud. I mean, they were the first to really go in and make a huge investment there. Now that's where everything's moving. Don't you see that as the future business and a reason to be involved in this?
Yeah, I think if you look at Amazon, Melissa, as just a retailer, I think you're making a mistake. You look at AWS, which is their web services. That's where a lot of their gross margin is, and that's growing incredibly. I mean, maybe that's part of why the stock is down a little bit. Maybe those numbers came in a little light, but I'll tell you, that is the future. You're correct with the company's growth outlook, and I think that's what's going to carry this company higher in the future.
Jason, we want to drill down deeper on the earnings per share number, but that was the one that was supposed to be a concern, and that's where we're seeing the beat right now. They had forecast that there were, so many costs involved in people like me who order a pack of gum and have a Prime membership and get it delivered that same day.
No.
But, they beat on earnings per share.
I think that Amazon is inarguably a fantastic world-class company. I think if you're speaking to investors out there and you're trying to help people make investment decisions, all I'm saying is that the thing has a PE of 200.
It's just too expensive.
At this point,
I got you.
It's just too expensive.
Okay,
exactly.
Let's go back to Adam real quick, who has some more color on this.
Okay.
Go ahead, Adam.
Oh, Charlie, hold on a second. I just want to let you know that Prime membership, when we talk about Prime, you can get Prime now, was up 73% since 2015. But they're not giving us the raw number for Prime membership, but it was up 73%. And web services, $3.54 billion. Melissa?
Okay. Jason, go ahead. You're finishing your thought on that. So the stock is just simply too expensive, is your point?
It's too expensive, and you know what? Amazon and Microsoft, obviously, this discussion could go on and on, but even from a cloud perspective, they're not direct competitors in everything they do, but in some things they are. Ultimately, I would rather own Microsoft. It's got a lower PE. It's got a more stable business. It's got a lot more room to grow than Amazon at this point, in my humble opinion.
Okay.
Well, as earnings season is well underway, as you can see, the biggest companies in the world are focused on one thing. We'll give you a guess. President Trump, obviously. Most conference calls center around the president's hot-button issues like tax reform, border taxes, and so on. Scott, it sounds like hyperbole to say it's all about Donald Trump, but it really is. You think about Apple. You think about Exxon, Amazon. Of course, Jeff Bezos owns the Washington Post. That plays into the Trump factor. It's everywhere, the Trump factor.
If you're a company in the S&P 500, David, you want to get along with D.C., and I think you have an opportunity, though. I think one thing amongst maybe some of the controversial things Donald Trump has done, he has reached out and I think connected, David, with the business community. It's such a sigh of relief, a breath of fresh air to have somebody in the Beltway that actually understands business from private sector experience. And that is why corporations are in better shape than they were just, say, 2 months ago when Obama was still in there.
Well, Jason, it's not only getting along with Donald Trump, it's understanding what makes Donald Trump tick and where he wants to go, how that affects things like the dollar, how that then affects things like exports, right?
Yeah, you got it, 100%. That's exactly what I was going to touch upon, in that it's really, I disagree with people making a blanket statement that Trump is good for the whole, stock market and every U.S. company. It literally is a case-by-case basis. As I alluded to before in my notes, if you're exporting, hey, that's great. If you get a lot of materials, inbound to make your stuff that you sell, right, you may suffer. Okay,
or
you may suffer.
If you're like Amazon, Scott Martin, if you're like Amazon, and a lot of the stuff that you're selling depends on cheaper imports, an import tax would really hurt.
True, David, but there's going to be fiscal reform to back that up, and there's going to be other job creation.
Let's hope. We haven't heard the details
David, that's what he's promised. Well, I'm telling you, though, but Jason said that that's not a great blanket statement. I will tell you that corporations are better off today than they were under Obama in the last 8 years.
No
We've already seen that reaction
on that
in the private
agree.
Sector, and that's already speaking volumes.
Let's just get those tax specifics. Melissa.
There you go. Business